David, thank you very much for agreeing to talk to me. As you know, this is part of our project on the future of the global financial system. And obviously, no discussion of that would be complete or would even be relevant without talking about the role of the IMF. When the Bretton Woods system was established, the IMF was seen as playing a very central role. It certainly has played a major role in the last couple of decades. And I thought maybe I would just start by asking you that if you were just to look at the last couple of years, where do you think the IMF has been the most relevant? And then I'm going to ask you, where do you think it has faced its biggest challenges?
Well, Jeff, let me start by saying thank you for inviting me to be with you today. It's a pleasure. The IMF's played a very important role in fighting the present financial crisis. It's required us first to increase the amount of lending firepower that we have. We raised a huge amount of money at the time of the beginning of this crisis, at the time of the G20 London summit, and subsequently more money last year when we convinced member countries to lend us money so that we're strong enough, financially speaking, to deal with the size and scale of today's global financial challenges. So that's the first part. Secondly, we've had to adjust and change as the world has changed, and that's required us to reform. We are working on changing our governance since now emerging market countries are bigger and more important. We need to change our governance so that all countries feel as though we are their institution, a legitimate global institution. We've had to change a bit the way we interact with countries and support them, because the global economy has caused new kinds of problems for different categories of countries. We have ways to lend to countries that are good performers to keep them from getting into trouble. We have ways to lend to very poor countries. We have ways to lend to countries going through transitions like in the Arab Spring. Most importantly, though, I think really the most important is that we stay relevant so that we're the go-to institution that countries want to send out to try to deal with the problems that arise. And this crisis has thrown up all kinds of new challenges. So, for example, when Europe fell into financial crisis, we had to be the institution to figure out what's new, what's challenging, what are the problems. We were, I think, ruthless truth tellers, pointing out to the Europeans when they had problems in their banks, when they had problems with private sector indebtedness, sovereign indebtedness, when we felt that they needed to change some of their architecture, creating a banking union. We've provided advice along the way that's where we've tried to help European countries, our member countries, deal with the crisis that they have. And I think that they, of course, have to take the actions, but we can do the diagnosis. We can provide them with ideas and policy suggestions. And then with the lending firepower that we have, where necessary, we can provide financial support to the countries that need that.
So let me ask you just one clarifying question. Originally, the IMF's lending role, I believe, was sort of described as helping countries to overcome temporary balance of payments problems. But we've just been through this major crisis. I don't think anyone would have described that global financial situation as only, temporary balance of payments. And obviously, you mentioned Europe. It's a much bigger issue. How do you describe the use? What is the fundamental use of the money that the IMF has? When you talk about lending programs, how has that evolved from the early days when it was just seen as sort of temporary financing?
Well, you're right that our role has evolved. For several decades, the IMF tended to lend money to low-income countries or middle-income developing countries that had temporary balance of payments problems. And now what we've seen is that amidst crisis, even advanced economies have been having problems. Now, I think they really are still balance of payments crises. If you go back and think, it wasn't that long ago, a year ago, that people were starting to ask questions about whether the Eurozone would stay together. That is fundamentally a balance of payments question, but they are now big temporary balance of payments questions. But our fundamental role remains the same. We've lent to Greece and Ireland and Portugal and Cyprus now in Europe. The idea is that those countries have developed a range of problems, but they include budgetary and balance of payments problems. And by borrowing from us, they can adjust more gradually than they would have to adjust if they didn't have financial support. We, of course, are not the principal lenders. In the cases of Europe, because the financial needs were so great, we catalyzed large lending from Europe itself to some of its most affected members. So we were part of financing packages. But in the same way that we have in other situations, we've helped countries have enough finance to be able to make change somewhat more gradually, and that's been our role.
So would I be right in thinking that there is really no other institution, there hasn't been another institution for decades that can analyze the policy changes that need to be made in return for the loans that you participate in and catalyze? That when all is said and done, the world isn't short of money, but it is the linkage that you provide between the policies that need to be enacted for sustainability and the fact that you together with others, provide the financing to smooth that process.
Yeah, I think that's right. But let me back up and say we are an institution with 188 member countries, most of the countries in the world. We provide analysis and advice to all of them. We have a process we call surveillance, a process of consultation where we discuss with each member country how it's doing, what its policies are, which policies could be improved. So we're doing that around the world. In the countries where there are acute financial problems or what you referred to, temporary balance of payments need, then we step in and provide both the advice and the finance within the combination that you spoke about. We need to have enough lending firepower to be able to play that role. So as the global economy grows and the possibility of more widespread crisis arises, we need more funds. We've taken care of that to some extent, although right now we're seeking increases in the members' what we call the quotas, the amount of finance that they provide here. But you're absolutely right that what we do is this, I think, rather unique combination of policy analysis and advice on the one hand and providing finance on the other. For us to be the go-to institution, the trusted institution, that advice has to be the best advice. It has to be good advice. And through the decades, the fund's challenge has been to figure out what is the nature of this crisis, what do countries have to do. And that's not a static thing. If you go back and think about it, in the 1980s, there was the Latin American debt crisis where countries had problems with their loans from commercial banks. That posed a certain set of challenges. In the early 1990s, all of the economies in transition had to move from communist economies to capitalist economies and join the world economy. Whole new set of challenges. Then the set of late 1990s financial crises, Mexico, Russia, the Asian crisis, were more about failures in international capital market relationships. The fund had, again, to learn again how to deal with a new, in essence, how to hit a curveball, a new pitch that hadn't been thrown before. And now we have the global financial crisis, where advanced economies are very interconnected, are having a set of problems that involve deep failures of finance in banking, in capital markets, and in their sovereign borrowing operations. But what we try to do is each time, while we may not get it exactly right the first time out, we try to figure out what's going on, provide the right advice that will keep us relevant and the go-to institution for our members.
So in that same spirit of, the kind of the ball bounces a different way each time, is very difficult to do, but if you had to sort of put your finger on 3 or 4 of the biggest trends that you think are likely to shape the global economy going forward, let's maybe push aside crises that come out of nowhere and which almost nobody can really anticipate. But when you look at the way that the global economy is evolving, as far as you can see, what are 3 or 4 things that you feel will be challenges not only for the system, but for the IMF at the center of it?
Sure. Well, let me separate this a bit into the economics and let's say the macroeconomic and the structural.
Okay.
What we see going on in the world is that the advanced economies have plateaued somewhat. They've matured, their growth rates have slowed somewhat. They are facing some new difficulties. Those may persist for some time. You have emerging market economies that have been for some years growing rapidly and converging, beginning to approach those income levels of the higher income economies. And you have developing countries that aspire to be emerging market countries, including some, probably a dozen or so, that have a good shot of becoming emerging market economies. And one question we have to face is how those different groups interact with each other. What are the effects that come from events in the one group that affect the other? We've seen, for example, the slowdown in advanced economies leading to almost no export growth recently, which affects both the emerging market economies and the developing economies. We now see the slowing down of the emerging market economies likely to depress commodity prices, which affects many others, including some of the poorer economies. So a challenge for us is to, in this deeply interconnected world, to be able to see how the pieces fit together, take a look at what you might call the multiple equilibrium of the global economy, and make sure that we help each of the groups pursue policies that are best for themselves, but also policies that, when taken together, will lead to the best collective outcome for the global economy. We do that here at the IMF. We do that through our work in the G20. There are also go ahead.
That's a big macroeconomic issue. Let me just ask you about it, because you're
Please.
describing sort of, and I think this comes from terms you have used. It's a multi-speed global economy.
Yes.
It's an analytical. In the first instance, just the sheer analysis of it and the understanding of it is pretty awesome. What makes it different from past decades where you did have different groups? I mean, realize that you're talking now, you probably could not have talked so clearly about, the different ones. What makes this such a big analytical issue, different groups converging, interacting? What's fundamentally different if you look at the next 10 years from the past 10 on this analytical question?
Well, starting with the past 10, what we've seen is that globalization has meant much deeper interconnectedness, and in particular, the connectedness that comes not just from trade. Trade connectedness was, in a sense, the story of several decades of development, but increasing financial interconnectedness and financial complexity. And so we now have to reckon with the fact that, for example, when the Fed starts to begin talking about the end of its unconventional monetary policies, the so-called discussion of tapering. Say in the 90s, if the Fed talked about tightening its monetary policy and the prospect of interest rates going up, that might have had an effect in Latin America. People used to say when the Fed gets sick, Latin America catches a cold. Now, when the Fed talks about tapering of its unconventional monetary policy, we see effects in India, in Indonesia, in South Africa, and really quite dramatic effects. The world is connected in ways that we've not seen before. So the challenge for us is to understand each macroeconomy, but to understand both the trade and financial connections that we see in the world economy. We have to reckon with the fact that the United States economy, even all of the advanced economies taken together, are not as large a fraction of the total global economy as before. The emerging market economies now are a very large fraction, not yet the majority, but getting close to being the majority of the global economy. And so from the standpoint of economics, they're more important. And from the standpoint of politics, there are now many voices where there used to be fewer. So we as an institution with a governance structure have to reckon with the fact that we have many members, all affected by each other's policies, and many large and influential countries that want to have and deserve to have a say in how international policy is made.
So what is the operational, I understand the analytical issue and how difficult that is to actually understand these multiple connections and the question of lots of different voices that need to be heard. But from an operational standpoint, from being the go-to institution, to use your words, what is it? Let's assume you had the best understanding of any institution of this interaction. Then what? What is it? Where does it come out in terms of the actual operational effectiveness of the fund?
Well, let me say a little about what we're doing that we're doing differently than before. Okay. We now have the mandate to do more multilateral surveillance. We used to visit a country and talk about that country's issues and policies. We now look at this in a much more global setting. We have a whole set of work that we call spillover analysis that looks at how the policies and events of one country affect other big countries, but also the rest of the world. We were given on another matter, we were given the mandate, you mentioned Bretton Woods earlier, we were given the mandate to determine whether any particular country had a fundamental external misalignment, meaning was their currency somehow out of whack with equilibrium or a norm? Was their current account, their exports minus imports, out of whack with what it should be? Were they running either too big a surplus, too big a deficit? And our mandate was to try to make sure that there was exchange rate and stability and external balance, meaning that balances didn't become out of whack. We now, for the first time, after being in existence for many decades, have developed a multilateral model that looks at external balances, both exchange rate alignment and current account positions, for not the whole world, but for most of it, where where one can see, taking into account all of these linkages, is country A's imbalance big, taking into account what country B through Z's imbalances are. So we're looking at external stability in a truly global sense. Now, once we have the results from our spillover work, the results from our external stability report, and all the work we do, we try to embed that in both in the advice we give and in the work we do with individual countries, but also when we go, say, to the G20, when we're summoned by the G20, and the managing director of the IMF will be summoned to, will be attending the G20 leaders meeting in St. Petersburg this year, and this presumably will recur. We have an opportunity in the G20 setting to say, we think that a set of your policies could be improved, and if different countries adopt more desirable policies, we can lay out what the mutual benefits will be and try to encourage collective action. I think that the G20 was set up to try to encourage this kind of collective action. I think we play an important role in feeding that process, and I think that's something that, while it works better in some instances in some years than other, going forward in this interconnected world, it's going to be very important for there to be a forum in which countries at the very high political level can commit to take collective action that's in everyone's interest. And I think we're postured, we're in a very good position to feed that and support and foster that kind of discussion.
Okay, so now go to the structural issues.
I was going to say that of course every country in and of itself has structural issues. If you think about China, it's been an export powerhouse. Exports used to grow in double-digit amounts year in and year out, and obviously right now with the advanced economies slow, they're growing, exports are growing at a very slower pace. So they have to think about how are we going to shift our economy to be less reliant on exports. They still have millions of entrants to the labor force every year. Where are these jobs going to come? How do we shift to a more domestic, demand-oriented economy? That's something they're working on, and we're working with them. So each country has its own version of its structural issues. But if you look forward more, and you ask from a global standpoint, and in the long run, what are the challenges? Well, the world's going to have demographic challenges. You know, we have 6 to 7 billion people in the world. What's going to happen when it's 7 to 8 billion? Some countries will be seeing aging populations with fewer workers per retiree, and that's a challenge that we are looking at. There's the question of how women will be welcomed or not welcomed to enter the labor force, and what the contribution of women could be, especially in countries where there are these demographic challenges of not enough workers. But yet, of course, in some countries, social and other obstacles to women entering the labor force. We see the challenge of scarcity intensifying. Obviously, there have been great breakthroughs in energy with some of the shale gas developments in the United States, but there's the question of whether energy resources, whether other commodities will be rising in price in the future when the world has more people and more demand, and how that will play out. There's the deep question about how the world will cope with climate change and its consequences, and what its economic effects will be. We at the IMF have ventured into the area of energy subsidies, including the implicit subsidy that that comes from the fact that countries aren't adjusting to climate change. And we think that that's going to be something that will affect probably all countries at many levels in terms of the productive efficiency, in terms of the soundness of governments. So there are a host of what you might call mega trends in the world that, while they aren't economic in the first instance, will have very profound impacts on macroeconomic developments. And we're looking at all of those subjects, and we'll be trying to provide analysis and ideas as time goes on.
So you were talking about the G20, and obviously the G20 has an interest in both the macro interconnections and the structural problems, and you are called on, the institution, to provide the central analysis of, you know, these various trends in the global economy and the policy implications. But could you just reflect a bit on the constraints that the IMF has in moving from an analysis of the issues, an analysis of the policy implications, to actually getting the global community to move in a certain direction? And I'll take the example of
Sure.
the imbalances, the trade and financial imbalances. From the very beginning of the IMF, this has been part of its mission, and I know that a number of people feel that you lack an enforcement capability, or there is a gap, let's say, between the respect that you enjoy in terms of the analysis and the ability to actually, you know, get countries to move in a direction which everybody could potentially agree theoretically is right. And I'm just wondering, in the world that is emerging, does this issue of enforcement, or maybe there's another issue, well, that I don't know about, that has to do with the ability to execute. How do we think about that in this multi-speed
Sure.
world with many more voices?
Well, let me say, if you'll pardon the expression, we're not the deciders.
Right.
Governments make their own policies, and what we can do, we are a member organization. We're a treaty organization, so members have obligations to us. They have the obligation to cooperate with us and to discuss policies and to to engage with us in this debate about their policies. But in the end of the day, we need to do such good analysis and present such a convincing case that we convince a government that our advice is worth taking. And we need to be able to do this. What's new, I think, in the global setting, in the multilateral setting, is that we need to be able to do this with groups of members, or even with all of our members, when there are junctures, as in the present time, where actions by one set of countries and actions by another set of countries are taken together in the common good. And we do that. We try to, this what we call multilateral surveillance. We try to do this ourselves, and we try to promote this through the various fora like the G20. But the best that we can do is to put forward the case. Now, as I say, there are certain obligations countries have. We have survived, we have succeeded over the years to whatever extent that we have by being persuasive. And in the case where we're lending money, by having the attraction that countries take up new policies when they want to be eligible to use our funds. But you are right that some have raised the question of whether we need new authorities, including enforcement mechanisms. I don't think the world, that's been an issue since the Bretton Woods Conference. There's long been the question, there's a sense in which obviously deficit countries may run out of money, so they have a tendency to have to act. Surplus countries who pile up money don't have that kind of constraint, and so there's what's been called an asymmetry of discipline here, and some have asked whether perhaps there ought to be some set of enforcement mechanisms that provides symmetric discipline. While that's an interesting conceptual idea, I think the world's just not ready to have us go beyond the present set of authorities that we have. So we operate with the authorities that we presently have, and we do the best.
How do you think that the IMF might look differently a decade from now? And let's make a few assumptions based on what you've said. Let's set aside some mega crisis, but let's say it remains a multi-speed world, that the connections become ever more intense, but that you have some real disparities, perhaps in the Arab world versus, let's say, East Asia, where you just very fundamentally different situations. You have a governance system which gives more voice to a lot of emerging markets. And you probably have a lot more financial resources simply because the world economy has grown so much and there's a multiplicity of problems. Mm. Does anything come to your mind if we assume that the world continues to look to the IMF as really the only global institution that can do analysis of the entire global economy, the only one that has that membership, the only one that has that depth of talent, and the only one that has the resources to lend in situations where there has to be a fundamental adjustment? Is just the same IMF, only bigger, or can one hypothesize some other features that it would have in an ideal situation?
Look, I think there'll be some continuity and some discontinuity. With the assumptions that you posit, I think we would have some changed governance. We would have much more influence for emerging market countries who would be bigger, and the say that they would have in the institution would be greater. So we would be listening to more voices more and more as time went on. I think that in the world that you posit, there would still be pockets of problems. The problems of the MENA countries, the Arab countries in transition, may have some links to what's going on in the global economy, but they have many special features, and who knows which region of the world would be changing, surging, needing help, running into crisis at a given moment. So we would do some of that. But let me say the discontinuity that I think is both is possible and is desirable is that we would be conveners of more peer review. This has been attempted in the G20, and it's had its stronger and weaker moments. But I think, in coming back to your earlier point about how do we get action, we really need a process where the countries sit together and they, in a sense, make a deal to take collective action. We would probably be, perhaps in a more formal sense than we have been so far, we would be either the secretariat of that or the institution providing the input in terms of ideas, scenarios. If you all do, a complete, what we might call a complete policy set with the following characteristics, you could achieve the following things that otherwise you might not. And they would sit and really truly critique each other and make something more akin to policy commitments to one another in order to reach the complete policy scenario and the better outcome. And we might be a bit more at the hub of that kind of what you might call a peer review, collective action process.
What about, let's just talk a little bit about the interaction of the IMF and the private sector. And I mention this because in the original conception of the IMF, actually there wasn't much private capital crossing borders, and I think that there was even a feeling that major private flows was not a good thing. But obviously we're in a world now where private capital dwarfs public capital, and so the role that the financial institutions play, the role that trading plays, is really is quite big. I know that a lot of financial institutions, most financial big ones, they key on the IMF. They have a lot of, they look to you for a validation of a country's policy or critique of a country's policy. But looking ahead, how should we think about the possible relationship between the IMF and this massive amount of private capital that is moving around the world?
Well, it's a tricky part because we have, as members, countries and not companies or financial institutions. Now, we have many interactions on a routine and daily basis with financial institutions. We need to understand their perceptions and their likely actions. We want them to understand our advice when we're giving it. We try to be now in the modern age to be totally transparent. If we give country X a set of advice, we publish it on our website. We want everyone, including financial institutions, to know our views. Others can have their views too. There are times when the financial institutions, analysts come to an idea before we do, or where we disagree with them, but it's an open discussion and debate. So to some extent this is a forum. But we do have the challenge that the actions taken by the capital markets are very consequential. As you mentioned, the amounts are large. The interconnectedness is deeper and deeper. So that's going to be an uneasy process, and I think it will remain so. The place where the rubber meets the road is often when there is crisis, when there's a stressed situation, or even worse, when there's financial institution impairment or failure. And there's a role for governments in sorting out how that's going to be handled, whether it's with some kind of debt resolutions or with some government-led process of repair, which is something, of course, we saw in the United States and Europe in the course of this crisis. Then I think our involvement would be, again, more through governments, but where our role would be more direct. I do think, though, that you're right in saying it's a new area. There will be some uncharted territory. Let me back up one step and say one of the things that we've been working on, along with the Financial Stability Board, which is a group that was set up by the G20 to look at reform of financial regulation. As we get past this crisis, what's most important is to have rules for supervision and regulation to lessen the probability that we have future crises. And so the design, we're playing an important role in that. Many changes have happened. We don't believe that enough regulatory reform has happened to make the world sufficiently safe. So we're still pushing on that agenda. But that's a way in which we will influence the setting in which financial institutions and capital markets function. How you've seen in the United States the Volcker Rule, and in England the Vickers, and in the European Union the Liikanen ideas for how banking systems would be structured, how regulation would make trade-offs with respect to the safety of a banking system vis-a-vis its profitability, leverage, and so on. And we'll be involved in helping to shape that agenda and shape the setting for private sector financial institutions to operate, and of course having discussions with them about that along the way. But I think that would be principally the manner in which we would interact going forward.
So would it be right to say, and I know I'm oversimplifying, that if you look at the entire global financial system, you're really at the center of the policy analysis and the assistance in terms of real imbalances. And the Financial Stability Board is really overseeing the whole question of global financial regulation. But these two are quite related, and you play a role you play a policy role, but you don't have actual responsibility for regulatory matters on a global scale.
We're not a regulator or a supervisor,
right.
But the link is exactly as you say, that the rules that are set out as financial regulation is changed affect the prospects for macroeconomic and financial stability going forward. So we've been giving our ideas, sometimes pushing a little for this to happen, sometimes saying such and such isn't such a great idea, where we judge that the choices being made are going to be very important in promoting international financial stability. And I think we've played a positive role in that, and that's a process that has taken huge steps in the last several years, but I think there's further to go in what you might call this round, trying to make the financial system stable. But there will be a role, I think, really in perpetuity as we react to changes in the system, changes in regulation that are calibrated to take into account changes in the system. I mean, capitalism is ever evolving. And so I think we'll always be in a situation of monitoring new developments, new interconnections, new risks, and trying to see that regulation and supervision is as modern as the economy.
So let me wind up by asking you two sort of quick questions. One is going to be, what makes you the most optimistic about envisioning a global economy that works quite well despite the enormous complexity? And then I'm going to ask you what worries you the most about it, okay?
Yeah.
So from the positive side, if you were to make the case, you know, we've had a lot of crises, and you reeled off several of them. And we're going to have some more for sure. And there are lots of parts of the world where economic and financial development needs a huge amount of work. And there are lots of problems, a lot of social problems that relate, that derive from that. But nevertheless, you look at the next 10 years, there really is a cause for optimism. How do you make, what underpins that?
I'm going to do it in reverse order so I can end on an upbeat note.
Okay, great.
As you say, the crises have come regularly. They appear to be increasingly sophisticated and difficult to contain. They have enveloped larger parts of the global economy, and I think that is a risk. When this crisis started in the United States and Europe in 2009, it was not clear how it could be resolved or that it could be resolved. And so I think there is the risk that capitalism keeps throwing up greater and greater challenges. And we, the IMF, were not sufficiently, we had been downsized because the world decided in 2006 that the world was safe and we could live with a much smaller IMF. So the IMF got caught in a sense on its back foot. The IMF membership got caught on its back foot. So the increasing interconnectedness, complexity, the tendency of capitalism to generate excesses, I think is a worrisome thing. I'd say as well the multipolarity of the world and some of the challenges of the megatrends have to sober you about the difficulties that my successors will have in the coming generations. So there's plenty of reason for concern. But on the other side, I think it's really an impressive thing to see how the world has responded to these challenges, albeit in fits and starts. Sometimes the decisions made by politicians don't feel very satisfying. But one step after another, the political leaders, the financial authorities of countries, finance ministers and central bank governors, the supervisors are taking steps to contain this crisis and taking steps to change the system to make the financial system safer so that there's a much lower chance that these things will happen again. I think we will see, perhaps to use a metaphor, if the world economy was a jet, we will see a somewhat slower and safer jet plane in the coming years. There will be a willingness to accept a little bit of caution in order to protect households, to protect jobs, to protect the budgets of countries. We may enter an era of a little more caution in management. And I think we're seeing much greater international cooperation among country officials than we've seen, with each genuinely understanding that we are in it together, that there is a need to listen to the other side and to take account of the spillover, what we call the spillovers, the interconnections. So, and I would say as well, I think our institution has performed well. As I say, not to say that we hit the first pitch of every game, but we learn how to do a really good job, and that's why we're the go-to institution. I think we've been ruthless truth tellers. I think we've helped countries see their situations more clearly and make better decisions, and I hope that going forward we can continue to do that and play a positive role.
David, thank you very much. It was a great overview, very thoughtful analysis, and I really appreciate it.
Jeff, thanks for having me.